Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, September the 2nd, 2025. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30, and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. Quick overview. Wave one is done. We're working on breaking down. Still think this latest move lower is not the swing point low, and we're ready to go breaking out. Based on latest price action, chart patterns, it looks like we will go on to make a new swing point low. We've been discussing that. The question is, at some point, when is this wave two going to end? Here, where we projected to go out like 3+ years ago, our target would come down here, or we're going to end somewhere lower than this one based on price action, but somewhere in between. We shall see, but just remember that at some point, this wave two will end, and we're going to go breaking out to new highs. That's the plan in a wave two correction. Do we end sooner or later? But at some point it will end, and we do go breaking out. Jumping into the charting platform, we can see, start off with the dollar index real briefly, that we've just been kind of chopping and grinding, overlapping as of late after a beautiful three-wave correction, ABC correction. We went through this in great detail, but it's something to continue to remember that typically you get a three-wave correction. Your retracement down in what would be the AB should go somewhere between a 618 and a 786 retracement zone. Then when the third leg of that wave, whether we're talking C or a 1, 2, 3, typically the third wave, if it's ABC, would stop somewhere between equality of the first move, which would be this 99 area in this example, or it can go as high as the 1.272 of wave A. So this stopped right in the area. We drew this big pink box like days and even weeks in advance when we were talking about this correction. Even as this started to push lower, we had great conversations saying, Mr. Tucson, this isn't going to go make a new low right now. This is going to reverse and go higher because several reasons. It fit the mold for the correction. The initial move up looked impulsive, not a three-wave correction. So that was likelihood at this came down, this would be the B wave, and we still had to play out the C wave. Another important parameter is the software. The software, we had a hook and a cross on this weekly time frame. On the weekly time frame, we had a hook, we had a cross, we had slope, we had angle separation. And with that weekly hook and a cross back then, that meant the daily was going to cycle. So even as we started to rally here, the daily didn't quite finish. So when we talk about a PAI, the only AI you need to know, everything's AI. Only one you need to know is the PAI, price AI. And then we got the trend momentum, but when that weekly hooked and crossed, it meant this daily was going to cycle. Red, blue, and green was expected to cycle. Trend momentum was going to cycle. So what happened when we rallied up and started pulling back? We didn't quite finish the cycle. Red and blue made it, but green money flow did not. So that's why I was even saying then, I even drew the Picasso when I said, well, you see this slingshot going down where red and blue's hooking down and pushing lower? What we're going to end up doing is go from a slingshot down to a slingshot up so that this could finish the cycle and we were going to push higher. It played out beautifully, right? Played out beautifully there. So not only did this look impulsive, the initial move up, but when it started coming back down, we already had a weekly hook and a cross, and the probability the daily is going to end up cycling is very high. What did it ultimately do? Slingshot down, slingshot up, red, blue, green, money flow. Everybody made it back to overbought here. And then our PAI, trend momentum, both made the cycle we were looking for as we did that ABC correction. Since then, we've come down and we've been chopping sideways, which is indicative of more downside. Amen? So any rallies, as I've been saying for days now and weeks, any rallies should be sold because we're not expecting this to go breaking out. Fair enough? So coming back over here to the charting platform, what are the lows we're looking for? Well, if you take this swing point low to the high, so basically the bottom of the B wave to the top of the C wave, we did a retracement into 618786, and we've even closed below it. That candle there, this candle closed right at it, but that candle closed below. This one yesterday closed below, and right now we're back above it a touch, but this is why these rallies are expected to fizzle. But those two closes on those red bodies streaming, we're going down to at least 96.70, 96.30. Well, by doing this, you take this swing point low to that swing point high. So the beginning of the A wave up, that low, swing point low, we have now retraced not quite to the 786 level, but we did break below the 618 of that level, which means we should go down to 95.80, 95.30. So bottom line, after the three-wave correction, we're expecting a lower low than what? This 96 area, and we're going to be targeting 95.80, 95.30. Even though we've been chopping sideways since then, the bias is clearly down. So that's what I've been saying since this top and reversal. When this three wave did its perfect move, stopping in the pink box meant it was more like an ABC correction and not a 1, 2, 3 impulsive count like a bottom reversal. And we were ready to start going breaking out. So when you look at my chart and you say, why does he have a question mark here? I could really take the question mark off because I really don't think this is the end of that wave. What I could really do is remove that wave 2 and move it somewhere further down. Because based on all price action, Eric, Mr. Tucson, Ian, James, Emil, Randy, we're going lower. No ifs, no buts. Yeah, there could always be some sort of exception in this case. Markets can do what it wants to, but price action, the ability to bounce and go breaking out right now is extremely low probability. The likelihood we ultimately make a new swing point low and push this wave 2 lower, extremely high probability. So that's why I had that question mark there to say, well, at one point it was in question because it could be the end and we go breaking out. But based on its price action since that bottom reversal, it looks like we definitely need more downside. So that's why we come to this chart, and any rally should be sold, and we're continuing to get lower highs, lower highs, lower highs, and we're working on lower lows, lower lows. So we still need to break this last little level we touched and we've been bouncing in. But once that finally gives up, expect we're going to get a push lower, not only to the 96.70, 96.30, but ultimately make a new swing point low, targeting 96, 95.80, 95.30. Amen? So the bias is clearly down. Why is that important? Because those of you that like Forex, I trade all markets. So these rallies are going to continue in the dollar yen, and this right here, dollar, euro dollar. So any dips should be bought, like any rally should be sold on a dollar index, inverse relationship. When the dollar index goes up, euro dollar goes down. When the dollar index goes down, euro dollar goes up. And the same criteria we use, the high to the low. We already took out the 618. We're going up to 118.90, 119.50. That's off of this high to that low. If you take the prior high to low, we not only took out the 618, but we took out the 786 with that candle body close up there, which states we're going up to 118.50, 119. So I've been saying for weeks now, not only did we set the software to buy that dip and we're up hundreds of pips, waiting to get hundreds more, we're in a position of authority. But you remember when we were setting this up, we talked about the euro dollar and we talked about when this daily was getting ready to cycle. We wanted to buy that. We got our trigger higher. We're setting it up days and days in advance. And even while you were not at your computer, this thing entered long and boom, we're in a position of authority. Now, all this chopping and grinding has been boring. I'm up 300 pips, but then we've been chopping in this zone for weeks now. And it is boring, but the idea is we're still got more to go because as the dollar breaks down and starts making a new swing point low, the euro dollar is going to break higher and start making a new swing point high. So we're going to go breaking above that 118, heading to 118.50, 119. And even as we continue to grind, we're targeting at 119.50 up there as well. Where do those come from? That's this high to low Fibonacci extension retracement zones. And after this retracement, three-wave correction, we got a beautiful move up, and that's just the tip of the iceberg. So we're still right now at 116.75. We're going at least to 118.50. So you're talking almost 200 pips more. And as we go higher towards this 119, 119.50, now we're talking almost 300 pips more. So I've been saying it for weeks, even though we've been shopping. This bottom reversal was beautiful. We got a trigger higher, went long. Software's got you in there, holding steady, and we're looking for this to pop further toward 118.50, 119, and then 119.50. Got it? So as the dollar index breaks to a new low, the euro is going to break to a new high, and that's where your 18.50, 19, and 19.50 targets come in. Fair enough? So with the software, you can actually do this by click to trade, enter the trade, which we're already in it, but I'm just showing you for demonstration purposes. And we could start targeting on-screen programming. We could put these targets where they need to be. And the first one we can set up at about 118.50. So I go in here if I want to drag it, or I can go straight to parameters and do it exactly if you want 118.50, for example. I just type in 118.50 and then say OK. And then it'll pop it at 118.50. And target 2 is going to be 119. I have these preset, but these are much higher. But this one would go to 119 for a short-term trade. Trend line, go into 119, for example. Easy way to do it, or you can just click and drag it, however's easiest for you. 119, that'll pop in, and then 119.50. We do the same, click in there, go to trend line properties, 119.50. And lo and behold, the software will navigate for you and allow you to take out those profits. The stop loss, we can move up into that swing point low, which is still a few hundred pips away. That's okay. We're in a position of authority in the real trade. This is just demonstration purposes, but the bias is in the coming days and weeks. We're going to go where? Take profit 1, take profit 2, take profit 3, 1850, 19, 1950. And this is extremely high probability outcome. As we already got in it a couple of weeks back, when the daily reverse, we got our trigger higher, and we're in a position of authority up hundreds of pips, not 3 pips. Got it? But that's the plan. So in closing on the euro, highest probability we're going to 1850, 1900. But when you take this swing point high to low, we already took out the 618. We haven't taken out the 786 up here. We tested it. So in the coming days, as this thing rallies and starts reaching those targets, we're going to take that high to that low, not only the 618 and the 786, which reconfirms we're going where? 75% we're going to 118.90, basically 119, and 70+% we're going to 119.50. So that's the plan, and continue to buy the dips. Any big sell-off should be bought until we reach these targets. What about the pound dollar? Expect more of the same. Pound was grinding. We bought the swing point, and now we got another little 3-wave correction after a big move up, 3-wave correction down. So this looks like the same. Here's my 3-wave after an impulsive move up. After what? A 3-wave correction. So the bias is the same here. Any dip should be bought, as this is expected to go higher. Why? Same rules. From this recent swing point high to low, we took out the this pink box, which was the 618, 786 zone. So it says we got a 75% chance we go on the 136.25 up here to 136.50. And we haven't reached that yet, so we get a little pullback. Notice where this is stopping. I can already see it without looking. From the recent low up to the high, see where we're stopping? Right in that 618. We didn't quite touch it just yet, but we're right in that zone. So this is typical that you get a move, you get your corrective move back, and then you go launching off again. So the same thing with the pound. We can do that with these targets up here, 136.50. Then when you look at the prior swing point high to low, you got 138.80 and 139.60 up here. These are high probability targets in the coming weeks and months. So we can go to the pound dollar, go over to the daily time frame, and do the same type of program here, where we're already in it, but this is just for illustration purpose. You'll get in, and then you're going to come over here, and you're going to set your take profit up at 136.50. This first one's fine. 130, what were those numbers again? Let me reiterate. 38.80 and 39.60. 38.80, 39.60. So that would be my next targets in line. Come over here, go to trend line. You can move it manually, but this way is a little bit easier. 38.80, 38.80. That'll be take profit 2. And then take profit 3 would be 39.60. 39.60. And lock that in. So now this baby's not only we're up several hundred pips and then we're grinding at the moment, but the bias is still much higher probability we're going to go higher in the days and weeks to come than we are to break down and make any new swing point low. Fair enough? All righty. So in closing on the pound and the euro based on the dollar index, when it goes down, these two are going to go up. And the probability has already been stated. We're going higher, just as it is on the dollar index. We're going lower, right? Same rules. We have a 75+% chance we're going to go visit this 95.80. 70+%, we're going to go visit 95.30. En route to that decline happens to be your 96.70, 96.30 area. But En route, we should keep stair stepping lower in the coming days, weeks. This thing could rip down in a day, or it could take days longer, but the bias is lower highs, lower lows, as we've been getting a series of lower highs, and we're working on some lower lows. So once we finally take out this last little support zone of this green box, then I think it's fait accompli, where we're just going to go down, baby. 95.80 first, 95.30, followed by, well, this 96 first, these lower lows here, then make a new swing point low to these lows over there. Got it? There you have it. And let's finish up. A couple more dollar yen. Same type of thing. I still think as the dollar breaks down, this dollar yen's going to break down. I'm watching this very closely from this prior swing point high, low to high. We're holding the 618 zone so far. But once we start to see this baby start breaking down below this 146 area, 147, 146.90, it starts to set the tone. We're going down to 141. So this green box, once we start breaking below it, sets the tone. So we do have a little ways to go. But once we start closing below that, then it sets the high probability. We're going to go visit 141, maybe 140.50. Fair enough? So any rallies, in my humble opinion, on the dollar yen should be sold. You could scalp these going up. That's fine. But I'm not looking for this to go breaking out. I'm looking for this initial move down, this consolidation to break again lower than I am for this thing to go breaking higher. Fair enough? Pound yen, again, we kind of said it that we might get one more push, Randy, to maybe go tip up here around 200. But I would not be looking to go long here. We're definitely looking for this to go lower in the coming weeks, months, and years because of that bigger picture. When we look at what happened, that was very impulsive down. So if this was an uptrend where we're continuing to go much higher, remember our conversation years ago, I made a bold statement. I don't make predictions. I'll leave that to the prophets. But I made a bold statement years ago, and I said that the pound yen was going to go on a multi-year run and run excess of 6,000 to 9,000 pips. As let me get the even bigger picture. We were going to come back when we were down at these lows and retest it over here. I made a bold statement that this would rally and at least go back to the prior high there, which was thousands and thousands and thousands of pips. And I even stated not only that, but it would take multiple years to get up there. And that's what the technical picture was saying. And it played out beautifully. Well, that's great. I wish I'd have been there and took advantage of every pip of it. Well, the next section is playing out now. And since that push up, and I'm going back to current hard right edge, this latest move since that last push is this big down arrow, right? This is where we went up, made that move, then we came down. That looks very impulsive down. So if this is a corrective and we're going to end up going higher in the future, then what needs to happen? We need a big down move. This is all overlapping, chopping, grinding. We have a high, we have the low. All of these retracements went into this 618, 786 zone, failed. Multiple times here, failed. We finally rallied back in here, failed. We're trying to pop one more time, failed. So this is screaming, we need to go down and make a new swing point low, which right now happens to be thousands of pips lower for us to get down here below that swing point low down here of 180. That's 1,800 pips anyway. And we're expecting this thing to start breaking down sooner than later, but no later than later. So what have we done recently? We're still in this rejection box, which the more times you try and fail, the more likely you're going to get the push lower. But That's why we talked about all this overlapping chopping price action. So it depends what you're trying to accomplish. If you want to scalp a few ticks, this thing sneezes and breathes 100 pips. It can inhale and exhale, and next thing you know, it went up 100, went down 100 before you blink. So it is volatile. But the technical picture is more downside than we go on ripping and breaking out to new highs. Fair enough? So as long as we stay in this big pink box, failing, more downside. So any rally should be sold on this, not bought with the intentions we're going breaking out. And we do expect we got a long way to go just for this. If this is the move up and we come back to retrace to even go higher, which is unlikely, it's still hundreds of pips to get down there. My 618 from the recent low to high is sitting around 190 and we're at 198. So any rally should be sold, get to your position of authority, and look for this thing to start breaking down in the weeks and months to come. So software wise, we could start targeting the same thing like we did with the euro and pound dollar, euro dollar. You can put the software on there and allow yourself weeks or even months for this thing to play out. Yes, it can happen quickly when it starts tanking, but the bias is we're not likely to go breaking out. We're much more likely to go breaking down. So you do the same. You go into the software, and we could do the exact same thing in the opposite direction, because we're expecting that pound yen to eventually break down further. So we want to go in here and we want to sell this thing, and I'm going to give it a little wiggle room, and I'm going to move these down considerably because I do expect a new swing point low. So 180 potentially. This thing could take a long time to play out. Come in this zone, look for a little battle zone, take profit one. I won't take too much time to do this. We want to get to a position of authority. And once we do, your stop loss will be automatically moved into profit. And we'll look for this to go much lower in the weeks and months to come. Software setting up for another push lower. So this is why we're looking for more downside as we've been testing. Big resistance zone and the least resistance after trying so many times. Failure is to the downside. Fair enough? All righty. So any questions on that? Bias is we got a long way to go to set up this new swing point low. So that's just a way of doing on-screen programming with the software. It'll sit there and churn. And whether you're sitting at your computer or not, sleeping or not, as long as your computer doesn't go to sleep, the software monitors 24/7 while the markets are open, and it continues to either take profits when it hits it, or it'll stop you out when it hits your stop loss to protect your account. Love it. Any questions? So any rally should be sold and look for some more downside because, in my humble opinion, this is leg one. All that's consolidation, overlapping, chopping, corrective. So we theoretically, just looking at this chart pattern, we need a new swing point low to clean this thing up before we can start talking about this thing going higher. All right? All righty. What about the markets? Why did we sell off? What is happening? What is the deal with that? Well, there's talk about we have to pay back the tariffs. That's not going to happen, but it's a good conversation. They always come up with some excuse. So, overnight action, we see a big sell off today. Was that expected? Yeah. After the recent grind to our target zone, we hit the 6506, push toward our 6514. We hit that initial target on a smaller scale. We just missed the second target. And yes, I still think we're going to go up here at 6530, 6600 before we're done. But is this correction now over and we're ready to go blasting off? Well, it's anything's possible, of course. But I do believe that this certainly met the need that we don't need to go any lower because we did get a nice retracement off of that recent pop. So let me zoom this in for you. And we can see that last week we talked about we were going to go higher to reach our target zone. Well, the recent high to low, we broke the 618786, so we got a 75% chance we were going to make all-time new highs and go to 6506, and a 70+% we'd go to 6514. We reached those, and since we reached those, we are retracing. Since this bounce in reverse, we're still at a higher low. So this has met what we needed. We got a deep retracement. You can see from our swing point low to swing point high, we tested that 618786 zone. So it's holding so far. Swing point low, swing point high. Let me take some of these off because there's so many lines there, but I'll redo it for you. And we're testing that zone. And this is the continuation move higher that we're going to get another higher low, higher high, potentially at this point. We need to see if this level holds, right? So I'm going to draw a fresh one from the swing point low to the current swing point high. We can see we're testing that 618786. And we didn't close below. The wick doesn't really matter. It's where the candle body closes. So if we can start holding this zone, I'll draw you a little box here. If we can start holding that zone and that holds as support, then the probability we're probably going to start grinding higher again looks good. So far, so good. So we need this price, prove it to me. Are we going to hold this and go higher? Start targeting 69.29, 65.47, or we're going to not hold this zone and start targeting 63.40, 63.21, and we make a swing point low. What's interesting about ES, unlike the NASDAQ, is that this did actually go on to break a new high, and that looks like an expanded flat correction. So if this is the A and that's the B, then price is going to prove it by not holding this zone, this green box. We close below there, not the wick, but the body of the candle closes below here. Then highest probability you want to go short and shoot for 63.40, 63.20, aka make a new swing point low. Got it? So this will tell us today, do we go multiple points lower, or do we hold this to potentially go breaking out to go shooting for 65.30, 65.50, 47 area? The reason I say it's different with NASDAQ is you see how from the recent high to low, we did make a new high, where NASDAQ did not. NASDAQ from the prior high did not make a new high. It made a lower high and it stopped in its tracks here. So this one is screaming, we need a new swing point low. And lo and behold, Mr. Tucson, look at that. We actually got one. So is it possible that that new swing point low is all we need for us to start breaking out? Potentially, yes. Because when you get the corrective mode, you typically need a new swing point low, even though, as you can see on this recent, let me draw a fresh one for you, but I'm going to draw this fresh move for you. So from this recent low to the recent high, right? Recent low, recent high, we're at the 618,786 zone today. Right now, we're below the 618. We're spike well below the 786, in which we actually made a new swing point low. But if this support box holds, this could be what we needed to get that correction finished, and this could start breaking out again. But if it doesn't, and it starts closing below this little green box area where we tested, and even today testing. But if we can't hold the green box, then you start targeting 22.9, 22.8, might even break down towards 22.5. So prove it to me. You going up, you going down? Well, we're down significantly for today. We were down much more earlier. We did get a new swing point low. Like I said, that would take care of the idea that we have to go down to the 1448, 1272. That's typically what usually happens, but by getting a swing point low already, that might have filled the bill for us to go higher. So if you're scalping a bounce on the NASDAQ right now, be in a position of authority because it may end up pushing lower, right? And if it does, what happens if we get a big sell-off down here? I'm looking to buy, right? We push down there, I'm looking to buy. But the key points to watch in the coming days are going to be, are we going to hold this and reverse? We're at a higher low now where the NASDAQ made a lower low. So this could be what we needed. And if we start closing and holding this green box and start breaking out, then yeah, we'll start targeting 65, 65, 47. Last week, we talked about our seasonality in the early part of September through like the mid of September. You typically get a little bit of a rally, then you get a pullback. But August, coming into this move, we're expecting a little bit of a pullback in August in which we went rally. So maybe they flip-flopped this month. Well, we got the rally in August, and the rally was supposed to get in September. We get a pullback there. And then in October, we're supposed to get a pullback. So maybe they flip-flopped a little bit. But I watch price action more than I watch seasonality, more than I watch anything, and I put the software to it. So if you're taking this bounce, which it bounced significantly, a moment ago we were down a lot more, and now we're at 30 points from its low. And sure, it's fine, but is it going to close that way? Watch where this daily candle closes. If we close below the 6,400 area, that's the key point to watch. Basically 6,400, 63.97 if you want exact. 6,400, 63.97. If that holds and we start bouncing, easy way to do this with short-term targets is going to be you take and let me take some of these lines off. I know you're like, well, Gary, all I see is a bunch of lines. Well, that's because we analyze this on the lowest of time frames. But this most recent move, you can use a 2.2 from the recent swing point high to swing point low. If this is going to hold and we start bouncing, then we need to clear this little hurdle of my 618 right around that 63.47, 64.47, and that 64.97. That's the 618,786. So Randy, if this holds and we start closing above my 64.50, 64.90 area, then we start targeting 54.49, 50, 65, 67, 65.50, 65.67. Got it? If not, and we close below that, then we're going to start targeting the swing point low, which I just erased a moment ago. But you use your 2.2 from the swing point low to the swing point high. If we can't hold this little green box, then we'll start targeting 63.45, 63.25. So the long of it is, if we can close above 64.50, 64.97 area, then we target about 100, well, above 65, we target 50 plus points. If we close above that level, then we're going to look for that to go higher. If not, and price proves otherwise, we close below 6,400, then we're going to be targeting about a 55-point shot lower to 63.45, 63.25 area. So that's the long of it and the short of it. Watch price action, force and prove it to me. So sometimes when you don't have to be in a trade because the markets are open, but when the technical picture starts to clearly show itself, I can assure you if this baby closes below 6,400, the probability going down here is through the roof. Over 75+% chance we're going down to these targets. If not, and we start closing above that 65.50, 64.50, 64.97, which is basically this battle zone where we tested, failed, tested in that zone, then it's extremely likely we do that. And I'll go ahead and move this pink box right there. Let me move this guy over there and bring it up to its new location. So we're stuck between support and resistance at the moment, and put the squeeze on it. So with the software, you could use your other trade management system that says, okay, if we break below 6,400, I want to go short. Or if we break above 6,500, I want to go long. And the software will sit there and do nothing until you break below 6,400 to go short with those targets, or you break above 6,500 and go long and shoot for those targets. That's interesting, isn't it? Love the software because it'll do everything for you. You just set the parameters, get it in a position, and that's our pending order trade management system, where I have pending orders to tell me to do what? Break 6,400, we go short. Break 6,500, we go long. And I'll even do one cancels the other. How about that? How interesting is that? So if it enters the short trade, it'll cancel the long. If it enters the long, it'll cancel the short. And bingo, you could take profits. So any questions on ES? This is all that talk about, we're going to have to pay back that $150 billion in tariffs. That's too many things, too many people, too many hands, too many everything. And it's just an overreach in my humble opinion. So I don't think those tariffs are going anywhere. And when the markets realize that we're not going to pay those back and we're going to continue to make hundreds and hundreds of billions more, I think we will go breaking out. The plan, remember, has always been to get to 6,600. And it's either pay me now, pay me later. We're going to get the end of the year Santa Claus rally, blow off top. So I still think we're definitely going higher. The question is, where do we go lower? If we don't hold this green box, you know what your targets are. We don't hold that, then we got 62.70 down here. But what I want you to do is go to your chart. See, I'll have this little box here on the daily time frame. That's where the Magic Fibo is located. The big orange line is the Magic Fibo. So you can start ticking this down and say, where's the 4-hour Magic Fibo? Well, we're testing it now. So typically, if you can't hold the 4-hour, which we might, we dip below, we're in here, there's a green box. If we hold that and start bouncing, then we start breaking resistance. We got our target. But if we don't hold this, especially if we do something like this, where before we tested it and tested it and tested it, and then we went ripping higher. So do we need something like that again? Test it. What I don't want to see is a break below, retest, failure. Then that sets up we're going lower, and there you go. There's your target, 63.45, 63.25. So watch the green support line. What is that? It is from the prior swing point low to swing point high. It is your 618, 786 zone. That's that green box. So if we break below 6,400, that's the proof is in the pudding. We're not far from it, but it's not the end of the day either. So I don't mean because we wick below it, then it means 100% we're going down here. No, it's if the candle body closes below 6,400, game on, we're going lower. Got it? So watch that closely. And if this thing, all of a sudden they say, well, no, the tariffs, we're not paying them back. Not only that, we're increasing the tariffs. We get more coming in. And now we're up to 250 billion in tariffs. And the markets like that activity, then boom. So support, resistance. I don't typically play the bounces in between. I typically play the higher probability once it proves its intentions. So again, close below 64, we're going down to 63.45, likely pushed around 63.25. If not, and this support zone holds, and we can break above 65, 64.97, 65, then we're going long for 50 points, 67 points. And I know many people in the ESE mini trading arena die and go to heaven with a point or two. So we're talking like a 50 point lower, 50 point higher, highest probability outcome, but you got to let price prove its intentions. Amen. And in the interim, a lot of chopping. So if we don't hold this, we're going down. What happens if we break that? Then we start watching lower down the pipeline. And again, this is the 4-hour Magic Fibo we're breaking below. The daily Magic Fibo is down here around 6,100. And again, it is sloping upwards. So if this takes a few days to come down here, maybe we meet somewhere around that 61 and change, maybe 6,200 area. We shall see. But the deepest, I can't say it's guaranteed, because if we break that support zone and we don't hold this one, then we're likely going to come test this again, which is sloping upwards. So as the days ticking by and we come down, maybe we hit around 6150, something like that to bounce. But if we don't hold that, then we got this next big box down here about 5,800, which is the next time frame, our 3-day Magic Fibo, right? So when I put my 3-day on here and it pops in here, that's that box. And if we don't hold that and we break down even further, then that would be the weekly Magic Fibo. So this is what I look for. At some point, we're going to get support and we're going to go breaking the all-time high. Hint, hint, hint. We're going to find support and we're going to go breaking all-time highs before this year is out. 6,600, in my humble opinion, will definitely come to pass. How much lower do we go? Well, that's why we trade it one day at a time, one chart at a time, one time frame. Looking at this, we don't hold that green box. We go for 63.45, 63.25. We don't hold that. We start talking about 62.70. And we don't hold that. Then we start looking for it to come down near 6,100, which would be the daily Magic Fibo. Fair enough? All right. NASDAQ, like I told you, totally different story. ES broke a new high. NASDAQ did not. But we've already made a new swing point low. So watch this. If we get that candle body close below the support and resistance, same thing on this one. We're testing that support zone. And if we don't hold it, which we did make a new swing point low, that's why I'm showing caution of more downside. Be cautious of that, because by making new swing point low, this thing could reverse. So I'm watching it again. But if we don't hold this support zone, then we start targeting in the neighborhood of 100 points, 150 points lower. So again, we can't hold this 23.1 area. Let me get that swing point low right there. 23.50, yeah, say 2,300. 23.38. We can't hold that support, say 23.50. I'll round it off. We can't hold above 23.50, 23,050, not 23,150, but 23,050. We can't hold that. Then we'll start targeting 22.9, 22.8. If this holds, then we got to do the inverse of that. And you would do exactly what we did on the other one. We have some upside targets at 24.2, 24,348 for the future, but we would use the 2-point tool, swing point high, swing point low, and we start closing above this resistance zone of my 618. So this is the bigger one here. Here's the smaller one, a little bit lower, 618,786. So if this bounce holds and we start closing above 23.5 up to 23.6 area, we break that, then we're going to 23.9, 24, en route to 24.2, 24.3. Only question is this new little swing point low? It's not by much, but it is a new swing point low. Is that enough to warrant this breakout? or do we need that push lower? Amen. We shall see how that plays out. But in the interim, I'm going to force price to prove it. We close below 23.50, candle body, not the wick. I'm going short. If this thing rallies and starts closing above that 23.6 up here, then I'm going long for several hundred points, multiple hundred points, and the big move up. Bias, we're going to make all-time new highs again. Yes. The question is, how much lower do we go? Again, 4-hour, we're already broke below the 4-hour Magic Fibo on the NASDAQ. How far down is the daily? It's considerably lower, near 2,200 right now, 21.7, 21.9. So could this not hold and we go breaking down? Well, there are some support zones in here. You can see your Fibo levels, but this would be typical. We don't hold this, we close below, then we target this support zone. We reach those targets, that doesn't hold, we got this one. That doesn't hold, then we're likely going, as this is sloping upwards, we're likely to come down and test this guy before we go breaking. But at some point, this dip will stop and we're going to go breaking new highs. Amen? Any questions on that? So if we close below this 2350, 23,050, we're going to target over 100 points down to 22,930, 22,830 area. So this would be your target zone. And if price then bounces and starts taking out from the recent high to low, starts taking out the 618, 786 to the opposite direction, then you start targeting your 23,9, 24, continuation of 24,2, 24,348. Big picture. Once this is over, and look, we might end up going lower, like the NASDAQ made a new swing point low. Check out ES, it's trying. We end up closing here, 6,400, it's the magic number. We're below it. I like to see a daily candle close, but once it closes below, you know your targets, and we don't hold that, then we go lower, and we might bring in the magic Fibo down here. I'd love personally to see that. Break down to here, then to go ripping higher toward the end of the year. But in my humble opinion, the big picture is we're going to reverse somewhere in that 6,600, 7,000 range. I made a bold statement a long time ago. Before we break 7, we're going to break 4,000 to the downside. So I'm looking for a blow off top by the end of the year. Then going in the next year, we're going to get a big move down and break below 4,000. That's kind of the plan at this point. We'll take day by day, turn by turn, GPS coordinate, one Fibo level after another, and one hook and cross pattern after another. But this is what we're looking for. So again, we closed below 6,400 today. Hint, hint, hint. Look for 63.45, 63.25. Knowing at some point this dip should be bought for us then to go back to 6,600 and higher. Amen? All right. NASDAQ, big picture. I'll zoom this in a little bit, bring this out so we can see that upper target up there. I expect we're going to reverse somewhere between 25 and 26,000 before we're done. So this correction, then we look for the end of the year rally and should put us up here in that 25 to 26,000 range, kind of my inner sweet spot. I did make a statement a long time ago. We'd at least go to 23,000 to 26,000 range. That was the plan. And then as we fine tune, we finally got there. And we're not at the end of the year yet. So now we, since then, months back, said we're looking somewhere between that 24 to 26, sweet spot at 25, 26 up here. All right. So big picture, we're buying the dip, and we're going to look for this thing to go breaking out to all-time highs again. The question is, do we get the further pullback and we see the close that we're looking for to go lower, Or do we get this bounce to hold, break the resistance zone to go higher? So we got a long of it and a short of it. And right now, because of that swing point low is the only reason why I'm more cautious. If this swing point low wouldn't be holding, then I'd be saying, oh yeah, just keep going short. We're going to 22.9, 22.8. We're going lower. We still have a few more 100 points to go. Let's see how this closes. And if we take out that 23,050 and we close below that, then by all means, I think the smarter move would be to go short, looking for 22.9, 22.8. If not, and we do a big reversal, it's early in the day, we could see a big reversal. If that happens, then I want to see it start closing above this resistance zone up here. And I'll put this to pink because that's the resistance zone. And we're stuck between support and resistance at the moment. Force price to prove itself. We close below 23,050. Then we go short to 22.9, 22.8. If this holds and we start breaking above resistance, basically that 23.5, 23.6 area, we start closing above that, then we go up hundreds of points to 23.9, 24. Got it? So the long of it, we got to close above this pink box to go long. There are your targets. The short of it, we need to close below 23,050. Then we go short for 22.9, 22.8. Might even pop down here to 22.5. If we don't hold this 1448, 1272 in the 1618 zone, basically we start closing below 22,500. Then look for it to come down and test the Magic Fibo before we potentially bounce. What about the Russell? Russell's a different animal here. It's trying to break out. It's been the one that's been the redheaded stepchild, totally unlike the ES doing all-time highs, all-time highs, all-time highs over and over and over, and NASDAQ all-time highs over and over and over. This guy has not. So I do expect a massive move lower sooner than later, but no later than later. But the current price action, we tried to break out, and we're retesting that breakout zone. So do we go a little bit higher? Maybe. That's what price action would tell us if we can hold this zone, right? The big green line up here is that magic zone, which was former resistance, multiple time, big sell-off. And since then, we stuck in this zone, but then we did test it, failed again. Most recently, we broke above. Now we're testing it again. This is important. If this can hold, then we need to start targeting 24.30, 24.50 to the upside. If not, and we start breaking back down, then we're likely going to come. You see how Magic Fibo right there is sloping upward. If we start closing below that test zone, then the likelihood we're going to start testing that little battle zone there, high probability. If that doesn't hold, then down to the Magic Fibo. So be careful with this one. The bigger picture is even with the new pop to a little bit push higher, the big picture has been for years now, this initial move down, retrace, another move down, lower high, lower high, lower high still. So this is why I'm watching this very closely. Do we break out and go just a tad bit higher, or do we fail and start breaking down? Either way, even with that breakout this direction, before I start going, woohoo, we're going to the moon, Alice. I'm looking for a new swing point low below 1650. So we got high to low, all this chopping, overlapping, chopping action still states that even with a pop higher, we're going lower to take out that 1650. Amen? So how do we trade that? Most people use IWM. And I made a statement just like with ES, before we go breaking 260 and ripping higher, so before we go breaking up here at 260 and ripping higher, I think we're going to go breaking 160 and go lower in the big picture. Not talking intraday, not talking this week. We're talking potentially going into 2026, but that is the plan, that I'm looking for a put spread out for a few years to give it time to break down below that 160 area, 165, and that is the plan. Same reason is all of this consolidating price action. This is a lot of overlapping, chopping, grinding area. This is not conducive to, okay, well, you're in an uptrend, you get your correction, and now we're going blasting off, and we're going to go to all-time highs and blow doors for years to come. Not now. All of that sideways overlapping chop says initial leg, overlapping, chopping, consolidation. B, we need a C wave down. We need some new swing point lows below this 160, more than we need this thing to go breaking out to 260 and above. And yes, markets can do whatever they want to do, but typically price action is king. So the higher probability trade is to be careful on any rallies and be in a position of authority, because I don't think this thing is just going blasting off. I definitely think it's going to come crashing down, and probably not to the end of the year, right? So be careful on these corrections. Hard right edge, zoom in, pull this down, and we're watching the same type of correction action. Is this the end of that run, or do we get one last little push? I'd be watching that green line, which I don't have it on this one, but I can come back to the same zone and draw one. That was on the Russell. This is on IWM. You got this same zone that we were testing. Test, 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 failed. And we tested here, failed, and we finally broke above. And we're trying to retest this. So if we can hold this 230 area, then that could lead to a bounce and start targeting 239, 240. Amen? But if we don't hold that support zone, then the door is ajar to come back and start testing this 224, where this latest bounce occurred from. So if we don't hold this zone, we're likely going to come down here. We don't hold that, then we're likely to start coming down toward the Magic Fibo, which is sloping upwards. And we look for this to come down about that 220, 215 level. So be careful. This could be the dip we need. All it is simply, hey, we broke out, we retest the breakout zone, and then we go to our next extension. That's possible. But if we don't hold it, so if we start closing below 230, then look for this thing to go down about 6 points toward that 224. Amen? So keep an eye on those. Are we going to get more upside eventually? Or are we going to get this now? Or are we going to get a bigger pullback? In the big picture, for all of them, is Elizabeth, I'm coming to join you, honey, into next year. And we're going to get a massive correction after this big run. What concerns me on all of these, you go out to a monthly chart, and why I'm thinking the big one is coming. You come back to the 2009, 2007, 2009 financial crisis where we bottomed. Since that bottom in February 09, looks like, we have not had a 618 retracement ever since that point. None of these pullbacks were 618 type of retracement. So you know what the old saying is, pay me now, pay me later, but oh yeah, you're going to pay me. So this is what I'm thinking is going to happen in maybe 2026. Start pushing down where we get a 618 retracement. It's substantial in the numbers, but it's still very healthy. right? You get to 618 retracements, you go into your extensions and rinse and repeat, but we haven't had one since 2009. Last financial crisis reversal. Even COVID over here did not quite get a 618 retracement. It was a little bit closer to about a 50% retracement, but it didn't, no cigar. So in the long run, Mr. Tucson and others, wherever we top out, is it 6,600? Is it 67, 68? What is it? I still think before we break 7, we're going to break 4. And look who's down below 4. The Magic Fibo on a monthly chart. And that's lining up with roughly a 618 type of retracement. Amen. Actually, a little bit lower than that, but you get the point. So we'll see how this plays out. This is long term. This is going into 26, maybe 27, another couple of years by the time we start topping out and tanking lower. Because you don't go and drop in a day or two. It takes a year plus or so for these dot-com bubble burst correction, then the 2007 financial crisis. Well, the next one I'm going to call is Elizabeth, I'm coming to join you, honey. And that's going to be some sort of 618 type of retracement. So we'll have a clean chart. We'll have a low. We'll have whatever the high is, 6,600, 67, below 7. And then we'll look for whatever these ratios are for a 618 type of retracement. That will be what I'm looking for long term. Short term, again, we got our pros and cons. We're looking more bearish than bullish at the moment because even on the lower time frames, we broke below the 15 Magic Fibo. Look how magical this Magic Fibo is. That is part of the MPA PE5 version 5.0 software. It's available in NinjaTrader and MetaTrader. And there you have it. It's on the chart and boom, boom, failing. But look how magical that is on a 15. 30-minute, we tested a few times, failed. 1 hour, we chopped around and finally tested it to fail. 4 hour, we're testing and now we seem like we're failing the 4 hour. So this is why I'm definitely more bearish than bullish. And again, we closed below 6,400. We're going to 63.45, 63.25. Got it? We're going to hold that 62.70. Amen? All right. And then NASDAQ, same thing. We don't hold this 2350 area, then what are we going to do? Go down to 23.9, 23.8, might even push down here to our 23.570. Now, one thing I want you to take notice of, when we go to this lower time frame and we look at the most recent price action, and this is the reason why I look at these futures, you get overnight price action where the indexes, you get gap downs, where with the futures, you have overnight price action and you see candle action. That's why I do that. I like to see the most candle action. But check this out, Mr. Tucson, 3.2. From the recent high to this recent low to this recent pullback, we are pushing the limit. Is this where we reverse? Is this part of an A, B, C type of correction? And this is now over and we're going to go breaking out? Well, at the moment, we're sort of holding. Actually, I use this one. Yeah, I guess I can use that one, most recent high. So let me get some of these things off for you real quick. And I'll move this one just so we see less line. But if we can't hold this green box, remember we said we were going to go lower. Typically, is this the 1, 2, 3? If we hold this zone, which is my quality 1272 area, and we go breaking back out, then this could be the end of a 3-wave correction, and that's ready to go breaking out. But if this continues to break below the 1618 or further, then it's indicative of a correction back up and then another push lower. So this is what I'm watching right now. Does this push to the far extension of 161 or greater? Or do we start reversing in the zone that looks like it's ready to reverse and go higher? Well, I still got to get above my resistance zone. That's where that resistance is and support is currently. That's what we've been talking about. But if this pushes down to the 22.8 level, which again, we closed below 2350, 23,050, we're likely going to go to the 22.8, which would mean Houston, we might have a problem in that. Let me move that out of there. We might have a problem in that this keeps pushing below here. And this is more likely a 1, 2, 3. And then we look for a 4, 5 and even push lower. So we'll see how that plays out. Amen. So I'm kind of circling the wagons for you. We close below 23,050. We're going to 22.8. Got it? That's the plan. And if we start closing below that 22.8, pushing this to the limit, then this doesn't look like an A, B, C. We've gone too far. It looks more like a 1, 2, 3, which would still leave us a little correction 4 and another push lower 5. And then guess where that would lead us to? Our magic Fibo on that daily chart. Right? So let's see how that plays out. So if we break down below 22.8, that looks very impulsive. So I'm not trying to tell you, hey, we close below 22,800. We're going straight down to this magic Fibo. No, because that would be a 1, 2, 3. We still need a 4 and a 5. But by the time that 5 wave finished, I would expect we're going to come visit that magic Fibo on a daily. Got it? All righty. Let's continue. What about black gold, Texas T, the Beverly Hillbillies? I'd be very careful with this rally. I've been saying it for some time now. Any rally should be sold. I don't see black gold breaking out at the moment. Same kind of principle. We had the initial push lower, retracement to a 618786 rejection, came down and broke the prior May of 23 low, and we've been grinding even though we're slightly above it at the moment. This looks more three-wave correction, and we got a leg down, three-wave correction, another push lower. So Dan and others, this bigger picture is I think these rallies should be sold because I do believe we're going to need a new swing point low below that 55 target. So once we start closing below 60, game over. We're going to go below, make a new swing point low, and the true target would probably be down here about 50. Low 50s, 53, 52 to 50 area. All I can say is, what if oil prices plummet and we get down to that low 50s, 50 area or lower? That's a good buying opportunity because not only does OPEC and everybody need prices, all oil drilling, refineries, etc. They need oil prices above $60 a barrel. So as this thing pushes down to 50 or lower, I see a big spike coming back up on black gold Texas T. In the short term, I would not be buying black gold with the expectation we're going breaking out. The technical picture is screaming downside. Down goes Frazier. Down goes Frazier. So any rally should be sold, in my humble opinion. And this chopping, overlapping price action is screaming the same thing I said months and months and months ago. This low in 2023, right? Right there, that May low of 2023. I said it way back, that low right there, May. It is actually May, that one, May of 2023. That Since that low, we got chopping, overlapping price action. We continued to see a lot of lower highs, lower highs, lower highs. And we were just chopping and grinding. And I said way back then that this swing point low of 65, we need a new swing point low because since that low, we got nothing but overlapping chopping action. And we started to see a series of lower highs. And then ultimately, what happened? Boom! We got our new swing point low. Notice this price action, Randy, Eric. Since we got that swing point low, zoom in on it. It looks almost identical to what has happened when I set it way back in March of 23. We got a low in, we came back to retest, and we've been chopping, but we're still seeing what again? A series of lower highs, overlapping, 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 overlapping. So that's another chart pattern that took some time to play out since 23. Remember, it took quite some time for that to play out, but ultimately we did get a new swing point low. So I'm not trying to say that we're going to get a new swing point low by the end of the week. Anything is possible, but this is screaming lower high, lower low than this is where let's go long now because this thing's going blasting off. Uh-uh. Price action, chopping, overlapping, overlapping, lower highs like we did over there. What ultimately happened? We pop lower. So my all roads are leading to a new swing point low. Because all this overlapping chopping action, we need a new swing point low to clean that chart pattern up. Amen? And that would target us down toward 53, 52, 50 area. It's kind of the plan. So in closing, still think we're headed to 60. We close below 60. That's it. We're going down 53, say 54, 53.95, 54, 52, then down to 50. Got it? So any rally should be sold. And if you're scalping that little bounce up a few bucks, woo, we're up $1.20 today. Woohoo! Just made a fortune on that bounce. I'd be pocketing that profit very quickly because I'm looking for a lower high, lower low. And when we finally take out 60, it's over. We're going where? 75%, we're going down to that 51, 52 target. 70 plus, we're going down about 50. That's kind of the plan. Amen? All righty. Any questions on black gold Texas tea? Gold. I would be very careful with gold as well. But Gary, it's going to 5,000. It's breaking out. Still, this looks like an expanded flat type of correction. We are making new highs. Woo-hoo! But all this overlapping chopping action still leads to believe we need another push lower. So I would be very cautious if you're trading gold short term, not long term. I mean, you keep adding gold to your portfolio, great, whether it's gold bars from Costco or however you're buying it. But if you're trading this short term, I would not be in this position to say, I'm loading the boat now because Emil, this thing's going to 5,000. Gary said it's going to 5,000. That is correct. It is definitely going to 5,000 in my humble opinion. But again, since this rally, all this chopping, overlapping, still states we need another push lower, and we really need a new swing point low before we just go blasting off. So even though it looks like it's breaking out to all-time highs, barely, right? It's barely doing it. Be careful, because I expect this is going to get a push lower before it's done. Short term, that is. Long term, after the dip, it's going to go ripping to 5,000. If I'm wrong and we just continue higher, then so be it. And I'm definitely a gold bull. But this price action does not leave me warm and fuzzy to say that, yep, this is it. We just consolidated here, and that is it, and we're breaking out. Let's see how people that buy at 35.12 make out. Does this go to 5,000 from here, or do we start dipping back toward the Magic Fibo and pull back to about 3,200, then go up? We shall see. But caution is the word at this price, even though it looks like it's breaking out. This is still overlapping and corrective. So nothing about this price action since that initial correction, right there, that initial correction, nothing about that initial correction looked perfect. But since then, all of that does not look very bullish for a true breakout. It looks like it's a head fake for a push lower to make us a new swing point low. That's what I'm looking for. All I can say is if this were to happen, this is a beautiful time to buy that dip and continue with this higher. Now, if you're just accumulating gold in the long-term picture to get to 5,000, by all means, we're good to go. Buying at 35 is a steal of a deal when you think it's going to 5,000. But if you're just trading this short term, thinking, I'm going to let this baby run because this is the next breakout, it's going, I think it's going to get whipsawed back down because, again, all of that leads to more of that than it does breaking out. So be very careful. SLV taking off, ripping higher, same thing here. If gold gets that correction down, silver's going to get the correction. So I'd be careful with this one as well. We're in the zone that we could potentially reach a target and reverse, then this thing just keep ripping higher. Now, admittedly, I've been a long-term bull of silver. This is one we got in most recently after a pullback, and we've been in this thing for a very long time. And I'm looking for this to get to 41.67, so we're not too far from it, less than $1 away. We talked about this way back from the COVID low when we got that rip and we got this little 618 retracement. We kept talking about we're going to get to 35 and we're going to get to 40. Remember? Well, that's where we went, so no doubt about it. All I'm saying is be a little cautious that you think silver is just going to keep going up. It is. Silver's headed, in my humble opinion, come back to my charting platform, silver's headed, SLV, this is a guarantee, we're going to $60 slash $70, no ifs, no buts, no ands, no exceptions. The question is this the beginning of that run up there? Anything is possible, but I still think we need a correction, right? So if you're accumulating SLV shares or going to Costco and buying silver bars or Roslyn Capital or whoever you're using to buy silver for the long haul, great. Buying it at $37 is still a steal, knowing we're going to 60 slash 70. So we're talking even a double from where we currently are, right? Short term. That's where I want you to be careful if you're just type day trading or just buying, getting in, getting out options or using some ETFs like SLV. I'd be careful because yes, it looks like we're just breaking out. We're going to go to the moon, Alice, to the moon, which again, 60, 70 will happen. But based on this overlapping action, this looks like we still need one more push lower and likely need a new swing point low. What low? That move. This is corrective. And we probably need one more push lower to make a new swing point low. All I can say is if that happens and we get a big sell-off on silver and gold, that's a beautiful time to buy and add to your position. or start a new position, add to a position, just get in. If we can get that pullback we're looking for, $32 or lower, man, you need to be buying silver big time because you're talking more than a double when we get to that 60/$70. I just want you to be cautious because it looks like, well, Gary, that's clearly a beautiful breakout. It's going to 60, you said 67. That's what we're en route to right this minute. Anything is possible, but this looked impulsive lower, and this looks three kind of wavish corrective. So is this a 1, 2, 3 breaking out? Maybe. But I would be aggressively taking profits if you're part of that breakout right now. And again, if you're only accumulating this for the long haul, then keep buying. Buy here, buy lower if it gets the pullback we're looking for. I'm just not convinced, even though we're at a new high, that this thing is just ready to go blasting off because that correction didn't look three-wave. Beautiful five-wave up. That looks like the beginning. And they have what they call an expanded flat or a running flat. This looks like the A. This looks like a B. And we look for the C to come back down. But if we get that pullback we're looking for, all I can say is that is a beautiful time to add to however you want to trade this, add to your position, because again, we're definitely going to see SLV sitting up at 60 bucks and 70 bucks before we're done. I just don't think this fake breakout is the one where we're running way up there now. Fair enough? And let's check something and see. Let me zoom this in just a touch more and see where these parameters lie. So remove some of these lines just for a second and look at, was this from the low to the high, 3.2, not a 2.2, 1 second, wrong tool, that tool, from this low to this high, to this higher low, we're kind of testing a danger zone. We're still at the big picture of our danger zone. That's what this big pink box is. I have to go out to the weekly. So I'd be awfully careful from all-time high to the 618786 zone up here. This is danger zone for us to then get whipsawed back down. And we're testing the upper end of that right now. So that's another reason from this prior zone, which we've tested, and we're breaking into it. This could give us the correction we need before we go breaking out. This is the target we're definitely going to, but be careful right at this zone, right? First things first. Looks like it's a breakout, Harold. It does. But is it truly? Is it truly going to go ripping, or are we going to get a big correction to finish the last move? And this, I mean, I guess you could say that was a A, and this sideways nothing was a B, and that's your C, and it's over. But I'm not so convinced. Even after the low, got highs, lows, highs, lows, highs, back into the same area. A lot of overlapping action. So even with this little pop, looks like we need a correction. Amen? In my humble opinion. So unless you're buying silver for the long haul, go for it. If you're trading it for the short term, I'd definitely be taking profits because we're reaching some extensions, and the next likely move is to fizzle manizzle and push lower. All I can say is if it happens, Harold, and we do come back down toward this magic Fibo, that 32 area, man, I'm just going to back the truck up and add to my position. So I really would like to see after the corrective action, this corrective action and this overlap, I like to see a new swing point low, basically get sucked down toward the magic Fibo, so around that 32 or lower, then it's game on. If you are short-term trading it, take profits, be in a position of authority. If I'm wrong and this thing continues to break out, so be it. But I think we're going to get another correction down, give us another opportunity to add to the position. But theoretically, even if it does go breaking out now, I'm not really wrong because it's definitely going to 60, 70. I'm not convinced that that is the beginning of the journey going to 60, 70. I think we need another push lower first. All right. So be in a position of authority. Let's continue. What about Bitcoin? Mr. Tucson, how accurate was that? What do we talk about, Emil and everyone else? That last swing point low, I said, man, it'd be such a crime if we didn't come back and test that magic Fibo. Now, this is not a guaranteed breakout just yet because it's reaching the zone. We still got to take some major resistance out, but we did touch it, and then we bounced and we touched it, and we came back and dipped a little bit lower, and we're bouncing. So this isn't a guarantee we don't get one more push lower, but this is what I wanted. I wanted to see Bitcoin come back to the magic Fibo to then go blasting off. Is this the beginning of that? Well, what do we look at to tell us if this is going to play out? Know the rules. Take all this out. But the last several weeks of our market reviews, I kept saying that we were going to go 110, 108. And once we got that the other week ago, when we got that 110, 108, remember that was in our list? We should see Bitcoin likely headed lower to 110, 108 level. Got that? So far, so good. So once we got there, then what? Well, is this what we need? Maybe. Is this the beginning? Here's our September window, that green line, and it goes over to October. This is kind of the sweet spot window for Bitcoin to start making its push. But do we need one more dip first and a push, or is this thing going to go blasting off? Keep an eye on, risk off. And what is risk on, risk off? Looking at global liquidity, the Nikkei. This is counterintuitive to Bitcoin going ripping higher and blowing off a top right now. We are retesting a breakout zone. So when Nikkei look like, and I use this for global liquidity, when I do think it's going to make a move toward 50,000, the question is, that was our recent breakout. Were we going to hold it? Looks like we're breaking it. So likelihood we're going to go retest this big breakout zone. And I probably should adjust this just a touch for this upper lower areas where we tested. And even then we kind of broke out, retested to go higher. Well, we did it again. We broke out. We're retesting that prior high here in this high. And if these don't hold, then we're likely going to come back and retest the battle zone / maybe even our magic Fibo. And if we start to see this, I don't see Bitcoin going breaking out. Risk on, risk off. So if global liquidity is starting to contract, then I see our ES market going down. I see NASDAQ going down, which is a little bit higher up here. But I see, let me do that again. If this breaks down, then I see ES continuing to break down. I see NASDAQ risk on, risk off continuing to break down. And even asset like Bitcoin is likely to continue to break down. So be careful. This could be potential head fake of a bounce like we got the last few times where Bitcoin looked like it was going to bottom and bounce, right? Bottom breakout, no. Bottom breakout, no. Bottom breakout, not so fast. And also, weakest of the trend line, we're looking at this prior trend line. I guess I need to kind of zoom that in so we can see more of that price action, stretch that out. But watch this little zone of these lower highs. Is that going to continue? I don't really like using that arrow. Let me use this one. So we got this prior, we're going to break through, or we're going to fail. Be careful. What happens if we get one more push? Great. The lower we go, the more I want to buy it and continue for the big breakout. Is this the beginning? Maybe. We reached what we needed to, the magic Fibo. I've been talking about that for how long, Mr. Tucson? Like we came close here, and I was like, I thought we were going to hit it. We didn't, and we went blasting off. So this next go around, I said, it'd be a crying shame, Emil, we don't test that magic Fibo. I want to see price force itself for the breakout, but I do think as we move from September to October, we will bottom and start reversing. And the goal is to get up to 150 to 170. It's still the plan. That's been that way since our below 20,000 in 2022, where we bottomed over here, below 20,000. And what did I say then? This is a crime to be able to buy Bitcoin at below 20,000. You need to be loading a boat because we're going to 150. Well, we went up to about 120, whatever the high has been so far, close to it. And we're not finished yet, in my humble opinion. Big picture, blue line is the halvings. Every 4 years, Bitcoin goes through a halving. And what is the behavior? 12 to 18 months post halving, you get a big run. You get a crypto winter low, then you get a next halving every 4 years. That one was in 2016. Let me move that up a little bit. But that was in 2016 here. We did a 12 to 18 month run. We got another crypto winter low, chopped into the next halving in 2020, 12 to 18 month run, all time highs. Got our crypto winter low in 2022. And now we're in the midst of that post halving, 12 to 18 month run. So we're not quite finished yet. So we're not finished. And the next halving is going to be 2028. What have we learned over all these years? We get a low, and you'll look at these numbers, and over here in 14, we got a low from the all-time high in 13. And we got a low in 14 toward the end, is right there, January, December 14. Then the next low came 4 years later in 18. And the next low came 4 years later in 22. See it? And then when did we get the highs? 13, 17, right there, 17, 21, 25. So what do we know about rinse and repeat? Wax on, wax off? That as soon as we get to this blow off top, 150, 170 or higher, we're going to get a crypto winter low coming in. And things could have changed by now. We have ETFs we never had before. We got a lot of different things than we've had before than these prior halvings, but we're expecting a big push lower. So into late 2026, we're going to look to buy like we did in late 2022 to then set the tone in late 2026 to buy our crypto and hold it through 2028 halving, 12 to 18 months beyond that halving, which is in April right now. I kind of got it right around May, but looking at it, it's roughly April at the moment. Somewhere between that April and May of 2028, we'll have the next halving, and then we'll go on a 12 to 18 month run post halving, puts us in late 2029. So every 4 years, we buy in 22, sell in 25, we buy in 26, sell in 29. We would have sold here in 17, bought in 18, sold in 21, bought in 23, 22, et cetera, et cetera. So isn't it interesting how every 4 years when we make all-time highs post-halving, 12 to 18 months post-halving, we go into a crypto winter, and then roughly 14, 18, 22. So this is why we're looking to buy crypto again in 2026. Got it? Late 2026. So many of you took advantage of this low down in 2022 when I kept saying for weeks to months, Bitcoin below 20,000, I can assure you is a deal of a lifetime. Now let's go back to that, show some of that price action. But look how that thing took off. Man, did it just go ripping higher. Unbelievable. Below 20,000 and we're well above 100,000. Isn't that beautiful? And we're not finished. So Harold, what do we got to look forward to? Blow off top into the end of the year, September, October, maybe it'll push it a little bit later, November, December. But toward the end of the year, we can get to that 150, 170 or higher. And then we're going to look for that going into 2026, late 2026, we get Bitcoin with a pullback. So if things play out like it has the last four other halvings, going into the next one, we should see Bitcoin come down. And I'll make a statement. Bitcoin at 50,000 or lower is a steal of a deal, like it was in 22 at 20,000 or lower. Do we get that low? All I can say is I see Bitcoin at 50,000 or lower in late 2026. Do nothing but back the truck up, and we're going to buy it, hold it to 2026, and hold that until late 2029 as Bitcoin will go ripping into the hundreds of thousands. All righty then. So, finish up with Bitcoin. I do think we're going to get the pullback into 2026, and then we'll talk about buying the dip and shooting for 2029, next halving in 2028, 12 to 18 months post the next halving, which is over here, roughly in that April, May of 2028. But I do think Bitcoin has not finished its run. Couple of reasons why. I'm going to go to the daily and show you the current price action, but I'm going to go to the software. And the reason I don't think this is quite finished potentially is looking at the software in NinjaTrader. We do have a daily that's oversold. Most recently, we slingshotted lower and we're getting a little bounce, another trigger higher for this bounce. But Harold, I think we may get one more push lower there, Ian. Why? Because the weekly is still very much down, pushing with steep slope angle separation. So this is why I'm not convinced that this bounce off the daily Magic Fibo is the breakout just yet. And as I was mentioning, going over here to our charting platform, is that if we see the Nikkei, which we were finishing up and we kind of got pegged, but we're starting to break below the breakout prior, so we should come lower toward the prior zone, which is this bigger picture. And if this continues to drop, global liquidity continues to drop, then risk assets like ES are going to go lower, like the NASDAQ are going to go lower. So this may be part of that deeper correction. This pushing lower in global liquidity means ES is going to push lower, NASDAQ will push lower, and it's unlikely you're going to see Bitcoin go ripping higher because it's a risk on, risk off asset. Even though we're up today, I don't expect if this keeps falling, the Nikkei, the ES, S&P 500 continues to pull back, NASDAQ continues to pull back, risk on, risk off. So again, throw those together. Nikkei for global liquidity, S&P 500, NASDAQ, all go pushing lower. I don't see Bitcoin going breaking out just now. I like the blow off top together where ES blows off top, NASDAQ blows off top, Bitcoin blows off top, and Nikkei blows off top. And that will be the end of the year push. So, like we were showing on the software, there's a good chance that we're going to see Bitcoin, as the weekly is still down, steep slope angle separation, that we're going to see this daily do another slingshot lower. All right. So be careful until then. So I don't say that it's impossible for this thing to go breaking out now. We're definitely going to make new highs, in my humble opinion. We haven't reached our 150 to 170 target. The question is, this pullback to the Magic Fibo enough, or do we still need to go a bit lower? We may need to go a bit lower. Let that weekly depressurize further. Let the daily slingshot lower, get another lower high, lower low, and then we look for the end of the year push and blow off top with the markets. Fair enough? All righty, so let's circle those wagons. A, ES. It is breaking down like we expected. We're looking like we're going to close below this, and we're pushing toward those 63.45, 63.25 target. So based on what we're looking at, unless we get a massive reversal anytime soon, we're going to get a new swing point low. And what are those targets? 63.45, 63.25. If that doesn't hold, and from the recent low to high, we take out this green box, then we start looking at 62, 61.70, which our Magic Fibo is sloping upwards. So maybe this pullback gives us a daily Magic Fibo bounce here. Then we start to see Bitcoin bottom reversal, ES bottom reversal, NASDAQ bottom reversal, Nikkei bottom reversal, and we get the blow off top we're looking for. So I kind of warned you about a bigger correction. Even though this most recent move did make a new high, I expected some more downside because that move there looked impulsive, not three wave. So even though this started to blow out, we reached the targets we had discussed, that 65.06 and that 65.14 on the lower scale. We did reach those, but I was very cautious about that I expected that potentially was that ABC, A, B, and expanded flat because we did make a new high, C coming down. So we're likely to start pushing toward at 63.45, 63.25, especially if we close below 6,400 today. I mean, we're only 20 something points below it at the moment. So it depends where we close, Harold. But if we get that 6,400 close, we're going to 63.45, 63.25. And then if those don't hold, 62.71. But that sets the tone from this low to that high. We start targeting 6,200, 61.60 if we don't hold that support zone. And then what? Maybe even come visit the Magic Fibo. So as long as the Nikkei is going down, ES and NASDAQ are going down, I think that's going to pull Bitcoin and prevent it from breaking out. Amen? Even though it's trying to bounce, it'll probably prevent us from breaking out right now. We shall see. So all I can say is if Bitcoin does get one more lower high, lower low, I'm going to look to buy it again after the others start pushing lower and we reverse. But toward the end of the year, as we start pushing September, which we're in, October, November, December, etc., the end of the year, last quarter, I'm looking for that blow off top, where not only is Bitcoin going to make its move toward 150, 170, but our ES is going to make its move toward 6,600 and above. And then NASDAQ make its move toward 25, 26,000. And bingo, that's what we're looking for. So to the downside, we're looking for 22.9, 22.8. right there, 22.8. So we start closing below that. The door is ajar to go lower. So do we end up with a new swing point low? Maybe, maybe. Right? But this could be the initial surge up, a big ABC, and then we go blowing off top. But I still think before it's all said and done, end of the year blow off top will be at all-time highs, and I want to look for that to be somewhere in that 25 to 26,000. Like ES will be minimum 6,600 and above, but less than 7,000. And then IWM, I'd be very cautious here. I kind of warned you about the IWM that it could potentially give us a little breakout. We're kind of retesting that breakout zone. But if we don't hold this green level, which you can see we're testing it right there with that candle, we don't hold this, then I think we're going to start pushing back toward that little swing point about 224. And then we don't hold that, then the Magic Fibo. Amen. But I'm least bullish on IWM for the fact that I made a big statement. Before we break 260, we're going to break 160. And I think that's going to hold. Before we break 7,000 on ES, we're going to break 4,000. We'll see if that big statement holds. Again, I don't do predictions. I do statements. I can anticipate with the best of them, but I leave predictions for the prophets. And last but not least, Ethereum, watching this closely, that we probably get Bitcoin and Ethereum both to pull back a little bit more. Maybe we come back to the 3,800 zone, Harold. So I'm looking for probably a little bit more downside before we go breaking out again. But I still think we got a good chance before it's said and done that we're going to go blasting off toward that 5,800, 6,200 zone up here. And why is that? You go back from the prior halving, all-time high, to the low after the crypto winter low. What have we done from the high to the low? We took out the 618. We took out the 786. So what is that screaming? We have a 75% chance we go into 5446, 70 plus chance we basically go into 6,000. And I like that fact, so I'm going to hold to it. So even with this real pullback by the dip, still think we're going blasting off to at least 55, 6,000 is kind of my sweet spot at the moment. We break that, then we start targeting 7,300. But what is that doing for our big trade on ETHU? And that is allowing a little bit of a pullback, but we expect we're more than likely, if we get the blow off top and all-time highs on Ethereum, then ETHU is going to make a push toward that 250 to 300 zone. And depending if we blast off to 7,000 and above, then I wouldn't be surprised to see this thing pushing in the upper 300s. But I do think there's some more upside to be had. And imagine the opportunity we had when we were buying this before the split. It wasn't at $22. It was like $4. We bought it, went up to 12. Then we bought again on the dips. But based on this low, what a run has it been, right, Harold? We talked about it when Ethereum makes a run back toward 4,000. Where is this going to go? 160 to 200. We went right in that zone. So if again Ethereum goes blasting off to that 6,000, 7,000, no reason to believe we won't be up at 250 to 300 range. And that's what I'm looking for. Look for this to go higher as Ethereum gets its push toward that 6,000 range, is where at least 5,500 to 6,000, but it will be at an all-time new high. And all-time new highs mean this is going to push more toward that 250 to 300 range. All right. So any other questions? I'm still big into TSLL. Yes, I know we're getting a pullback and it hadn't done a whole lot, but it's done plenty for us in the past. When last October in 24, we could have bought it about $8. Actually, here in October, could have bought it like under $10, and it went up to 41, a big 4xer plus. And this has been boring as of late, but we're looking for this thing to break out as well. Why? We believe Tesla is going to go ripping toward that 600 range, maybe 700. 661 is kind of a sweet spot. So I do think that this is ultimately going to go breaking out by year end. And when it does, I have all these shares of TSLL. I'm looking to do the same, kind of like our ETHU has done with Ethereum and what TSLL did the last time we talked about it. And as you well know, that was in the cards in October. We pegged it beautifully. October right there. Expect Tesla hit 500. Consider the TSLL trade. And that was right there, expecting move. And then we expected that we'd see a big move on TSLL when Tesla made a run back in October of 24, pushing toward 500. TSL would do the same. And sure enough, it did exactly what we wanted it to do. It blasted off from $10 to $50, $41 right there. Blast off. So I still think we're going to do the same here, rinse and repeat. It's been boring for the last few weeks, to say the least, but Tesla hadn't ripped up yet. I do think it's going to. So we have the potential to get this baby to go blasting off up to $50, maybe $60 if Tesla can make that run up here to 600, 700 range. That's the plan. All righty. So with that, I'll say good luck. God bless you. May the pips be with you. I'm humbled and honored to be your mentor and instructor. Join us again tomorrow. That's it. That's all. We'll see you tomorrow.